This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. I'm Prashant. With me, my colleagues Sonia and Nigel, and we are coming to you live from the CNBC-TV18 Motilal Oswal studios. Guys, hi, morning.
Hi, good morning. And it's been a couple of good mornings for the bulls as well, right? So it looks like today won't be too bad either.
7 days on a trot, guys. The market's been up, right? So that tactical rally that I think we will all been talking about for 2 weeks, 2.5 weeks, I think is finally, I don't want to say played out, but it's playing out. We're in the midst of it. So let's just quickly, begin as always by telling you what you need to know. And what you need to know, of course, begins with what happened overnight, which is, of course, the U.S. markets. Now, it was a flat day for U.S. markets. The S&P actually ended unchanged. The Nasdaq was down about 0.43% or so. The S&P, mind you, has been consolidating in this 4100, 4150 kind of zone. The immediate resistance is a trend line which stands at 4155. Actually, the bigger range for the S&P for a while now has been 3,800 on the downside and about 4,100 on the upside. I mean, it almost seems like it's building up energy for something it wants to do, maybe breaking out or breaking down. We're at the upper end of the, in a way, overbought range, and the momentum is completely flatlined on the two indices, that is the S&P. The dollar had a big move the day before yesterday on the upside. It was up about 0.48%. It completely reversed the move yesterday. The dollar index in focus, that is not bad news at all. Not that day before yesterday's move hurt the market action yesterday, but the fact is you want the dollar lower, not higher. Market pricing of what the Fed will do in May is getting firmer. So the odds that they will hike, and that the hike is to the tune of 25 basis points, the odds have risen to 75%. I mean, between now and, of course, the FOMC meeting, you've got the important data. That is the consumer price inflation number. That is later tonight. And I think that is after the jobs report, which came in line and beat some components as was expected. The CPI number is the big one. I mean, if we do get another beat, I think it'll turn the tables once again. And, the range we've been talking about in the S&P, and we're at the upper end of the range, I mean, maybe there is some downward pressure and some market starts to reprice what the Fed will do for the rest of the year, etc. So that has been important for our markets. We've seen this over and over again over the last year or so. That data point does have a lot of significance for the next 2 days. So keep an eye out on that one. As I said, the Nifty is up, has been up for 7 straight sessions. We are now knocking into some important resistance levels. Yesterday we had a good day. So the Nifty is now, as of yesterday, closed above the falling trend line channel. When I say the falling line, this is the big one, which is from the all-time high of 18,887. It meets the Nifty at 17,685. We left off yesterday at 17,722, which is not very much above the level, but it's a comfortable close nevertheless. So it's good that we've closed above this channel. The 50% retracement of the entire fall is 17,857. This is the same level we put out on Monday as well. So that's the next big resistance to watch out for. Yesterday, I mean, if you just look through intraday charts across the board, across important liquid mid-cap stocks, indices, one could sense some loss of momentum, right? So this needs to be watched. And I think the way to kind of assess this is if we do get another day like yesterday, I mean, a positive close but far off the highs, etc., then you'd want to start to get a little careful if you're trading very short term, given the fact that the market's done very well in a fairly short period of time. The 40-day exponential moving average, that stands at 17,466. But that is some distance away with, the kind of rally that we've seen. But that's the big level that you need to hold on to in terms of supports. On the Bank Nifty, the index has broken past the falling trend line from the December highs. This is similar to the price action we've seen on the Nifty. For the Bank Nifty, the first resistance is very close by, which is 41,400. We're about 40 points away. The 40-day exponential moving average for the Bank Nifty stands at 40,574, which is the level which needs to be defended if there is a bit of a reversal. But in the very near term, after 7 days, a very strong up move with the US CPI data right in front of us, maybe, and if you've made money, better to protect the gains and not risk it all. Be a little cautious. as you start to look at, just watch the screen and let the market tell you what it wants to do. In any case, I think in the second half of the day, as we get closer to a close, I think the market will get a little cautious and pull the brakes on the rally that we've seen for the last 7 sessions now. Sonia.
Oh, absolutely. And, it's been a good rally under our belt, right? You spoke about 7 days. The Nifty is up about 4.5% from the lows that we saw on the 24th of March. So I think that's been a decent rally that we've seen. And in that context, perhaps stability has returned to the market. Only time will tell. And a lot of data. So as, Prashant was pointing out, on the March CPI data that we're expecting from the US, there was a poll put out. The expectation this time is that it would rise by about 0.2% in March versus a 0.4% gain in Feb. Now, why is this important? It's because it could decide what the trajectory of the Fed could be going forward, what they do in terms of rate hikes, etc. What the next Fed meeting would bring about. So there's also the FOMC meeting the minutes that are due today. So further clues again into what the mindset of the Fed could be. So these are 2 data points that I'm watching very closely. Apart from that, Prashant was talking about the market running up for 7 days. Even FIs have bought in the cash markets for 8 straight days now. So yesterday, FIs once again bought about 340 odd crores. And put together, this is a buy figure of almost 6,000 crores that has come in from FIs in the last 8 trading sessions. So definitely some confidence has returned back into the market. Whether we build on to this, of course, time will tell. But pullback rallies have been long and ferocious in the past as well. So there's no reason to believe that the rally could come to an end. TCS earnings later today. I think this will be the last press conference that Rajesh Gopinathan will attend. So in that context, a lot of the focus will be over there. But growth is expected to be slower than Q3. Hardly a 2% dollar revenue growth is what the street is expecting. I'm looking out for commentary on deal wins, commentary on what the succession plan would be, the continuity of the organizational structure, etc., post the resignation of Rajesh. So all of that will, be something that the street will track, but that comes out at 5 p.m. And then you also have the March CPI and the February IIP data that's awaited later today. It's also important, although the RBI has already given its verdict with a pause, but this will be important to track. Retail inflation is likely to moderate in March to about 5.6% versus 6.4% month on month. So that's the CNBC-TV18 poll. So these are a couple of things to track. Of course, the market has had a smooth run. Let's see if we can build on to its gains. What are you looking at? There's been a lot of short covering, right, in the F&O
Well,
market?
that's been a lot of short covering. And, the entire trade setup is perfectly positioned for the Nifty to go to 18,000. Whether we go there or not, that's questionable. But provided we hold on to that 17,500, the setup is such that we're going to be heading towards that 18,000 odd model. Let's get the ingredients in place. Later this evening, as Prashant said, you have the CPI data. The hope is that it'll be favorable. Don't get any shocker coming out from TCS as well as Infosys, because the street just going by the stock performance, they're not expecting anything great out there. So you don't any shock on the numbers, you don't any shock in terms of the commentary as well. And the FI positioning, even after this short covering, they're still pretty much net short on the index. Even yesterday, on the Nifty itself, you had a big short covering bounce that played out. Though on the Nifty Bank, the shorts still seem to be holding on. Now, the FI activity is quite encouraging because, as Sonia said, they've been buying for the last 8 sessions odd. They haven't sold, in fact, from the 27th of March itself. And in this period, the Nifty is up by close to around 5%. The FIs in the F&O market, well, their net short positioning has halved. We were talking about 1.5 lakh contracts net short. That's come down to around 60,000 odd. And even in trade yesterday, they covered close to 18,000 short contracts. And that's not a small number. On a day-to-day basis, they're covering 15 to 20,000 short contracts. The short positioning that was at around 92% has come down to around 72%. So that's massive. And now the short positioning, that's a net. The shorts minus the longs, that's come down to around 60,000. Just a few sessions ago, at the start of the series, it was at 1.4 lakh contracts. Bulk of the short covering, as I said, has been seen on the Nifty futures. So that's telling you the shorts are still sitting in the Nifty Bank, which could give you reason to move higher. Moving to the options data, well, they bought puts yesterday, the FIs, but they wrote puts as well very, very aggressively. And both those two strikes, imagine in a single session, close to 1 crore shares getting added at around 17,700 put. That's telling you very, very aggressive writing is what we're seeing at those levels. So let's get to the levels first. Resistance, well, it comes around the 100 DMA, which is closer to around 17,900. On the downside, the 50 and the 200 DMA, that's around that 17,500 to 17,550. 180 points lower from here, so crucial we hold on to those levels if we want to go and visit that 18,000 odd mark. The Nifty Bank as well, yesterday we saw signs of writing. 41,200 put was very active out there. The premium came down to around 100 rupees odd. So holding on to 41,000 will be rather important. And let's give you two big levels out there. The 50 DMA, which is a fair distance away from here, but now the bulls have their eyes set on around that 100 DMA, which is at around 41,700. Nifty Bank gets to around 41,700. We make a dash towards that 18,000 mark. The ingredients are in place. Let's see whether or not we can do it in this series itself.
All right.
By the way, we're also wishing Nigel a very happy wedding anniversary today. He's celebrating his 8th anniversary.
Thanks a lot, Suna. Thanks, Prashant. Good day. I mean, my wife's Punjabi, so today was the big Gurudwara function. So I'm very happy, and I'm going to take her out for a special lunch today. So.
Okay, forget about the lunch and all. What's the marriage advice, guys? I mean, Prashant, I'm sure you're a veteran in this arena.
I'm tuned in now.
You make me feel old, Sonia. Veteran is, polite usage for old, right?
So any advice for him?
But it's going to be a good day.
Keep the peace.
Nigel, I have only one advice for you. 5 words, right? Which works all the time. The wife is always right.
Oh, right.
I mean, we have learned it well, right?
Maybe I said keep the peace.
All right, guys. So a lot of celebrations here in the studio. But let's kickstart the show, right? So much to watch out for in terms of news flow as well. The IMD has predicted a normal monsoon, so that's worked in favor of the markets. But let's tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Rana Gupta of Manulife Investment Management will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we'll do a fundamental stock analysis with Hemang Jani of Motilal Oswal Financial Services. So lots coming up. But first up, let's also get a quick take on what's happening in the world of equity. Surendra Goyal of Citi expects a Nifty Q4 earnings growth of 6% year-on-year, with weakness in materials offsetting relative strength in financials, autos, industrials and healthcare. They still see limited upside given weak consumption trends. With rate hikes on pause for now, the market would likely focus on domestic demand trends, net interest margins for banks and global cues. For earnings, Citi expects a moderate downgrade trends, and after the recent market uptake, the Citi investment sentiment indicator still indicates a 10% 12-month forward returns. Citi's March 2024 Nifty target is 18,500.
Okay, well, Rhythm Desai of Morgan Stanley says that India continues to be in the midst of an earnings upcycle with a likely broad-based quarter-on-quarter acceleration in earnings led by margin improvement. He says they would buy financials, consumer discretionary and industrials into the earnings season while avoiding external-facing sectors.
Okay, let's also try and get you some money market views for the morning. First up, Kunal Sudhani of Shinhan Bank says US dollar ends its positive streak ahead of the key consumer inflation data and the FOMC minutes due later today. He says the dollar index may continue to find strong support at 101.3. He adds oil prices and the Chinese yuan continue to consolidate. And for the dollar, INR 81.80 acts as a support while 82.30 is a resistance.
Well, on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of between 7.18 to 7.29%. He says the RBI surprised the market by keeping status quo on rates. He adds the market also remains supportive on lower SDL supply and mutual fund buying, and yields traded lower by 10 to 15 basis points with a steepening bias. For the rest of the week, he says the market will take cues from India and US CPI data. He expects the 10-year benchmark bond yield to trade in a range of between 7.15 to 7.3%.
Well, that's how trade set up, but we've got a lot of stock-specific action, and we're going to get to that in just a bit in our special Top 10 segment. But let's run you through the list first. Sula Vineyards, you have Sagar Cements, Venus Pipes, you have BHEL, Titagarh Wagons, Time Technoplast, Sanofi. Their stocks on the back of positive news flow. While on the flip side, you have Nifty and Bank, Delta Corp, and Delivery. All of them could be reacting to negative news flow.
Okay, Rana Gupta is now joining us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here on the program. Thanks very much for your time. Are markets breaking out, Rana? Are we at the cusp of that sort of big break higher? Or as many local fund managers have told us, have been telling us for the last 2 or 3 weeks now, expect a tactical rally, but don't expect anything big. This is going to be very much an up and down year over and over again. So very choppy, and ultimately the result by the end of the year on a year-on-year basis is not going to be anything spectacular. Your sense, Rana?
Good morning. The view is that, given the kind of global setup that we see, rates are higher, then there are a considerable amount of geopolitical uncertainty, and the growth is going to slow down, at least in the US and the Europe. With such slowdown, and then rates still high and the commodity prices, of course, they have come down but elevated levels. It is somewhat difficult to say comprehensively the markets are done missing out and breaking out. What we do think is that markets will consolidate within a band, and the breakout we have to, I think, wait for some more time. However, I think what is worth pointing out is that the growth rates will be very diverse across geographies and sectors. If you drill down to India, the Nifty, I think, over last 1 year has been more or less flat. But when you look at the sectoral performances, if you look at the auto, FMCG, banks, they're up between 10 to 20%. On the other hand, IT, pharma, they're down about 10 to 15, 20%. Even metals, software, things is flat. So I think the message is that given the disparate growth that we see, one has to select the sector and stocks carefully to generate material performance. Overall market, because Indian markets are a mix of both global and local sectors, and global outlook is soft, overall market may remain somewhat within a band.
Okay, so the market may remain range-bound is your view, but give and take everything, it's been 8 straight days now that foreign investors have bought into the Indian market. So at least compared to emerging market peers, has India started to look attractive on a valuation and a growth parameter? And if yes, do you think this outperformance is something that can continue?
Sure, I think first on the emerging market comparison, I think there is no doubt. First of all, the emerging market complex looks a bit more attractive. Although, you can look at more bottom-up basis, but just for the sake of top-down, I think US dollar looks like it has picked out. Rates peak inside. Commodity prices are flatlining. So therefore, I think all this sets up a good background for emerging markets. Now, within emerging markets, India was overvalued if you go back 6, 7, 8 months as compared to not just the relative valuation. But through markets in consolidation since some time, through this consolidation, we believe that the overvaluation that one was talking about is kind of knocked off. And if think of it this way, last 1 year, Indian markets are 2%, earnings have grown 12, 13%. So in effect, in real terms, you got a correction of 10% on valuation, which is quite good. Also, the bigger picture now, when we look at India versus the emerging markets, the bigger picture continues to be what we have been saying for last few years now, that formalization, digitalization leading to lower fiscal deficit, better manufacturing will lead to better current account. It has come at a positive surprise that the services exports are already doing so well that the current account already below 2%. So overall, the message is savings in the economy is getting higher. And with this savings investment cycle, there's adequate savings there to go for the investment cycle when the global environment is that global multinationals, global companies are looking for an alternative sourcing base. So all these sets a pretty interesting background for the Indian economy as such. And if you're looking at the domestic facing sectors like banks, industrials, I think it sets up a pretty good background.
All right, Mr. Gupta, for the Indian markets, do you still believe that we could get high single digits to double digit returns for 2023?
I think high single digit to low double digit return for the world market is quite possible. I think it's because the valuations have corrected as we have mentioned. So I think it is fair to assume that markets will give return overall in line with the earning growth. But we are really focused on domestic facing sectors where we think the opportunities, not just for 1 year, but over a 3-year perspective, the opportunities look pretty good.
So you're focused on domestic facing sectors. Does this mean you're staying away from, sectors like technology? I ask because TCS will be officially kickstarting the earnings season today, and it's not looking like it's a great picture this quarter around. How are you feeling about it, and would you stay away or would you go all in now?
I think for the Indian IT services sector, you will see a slowdown in revenue growth on a year-on-year basis, which means, last year was a double digit, this year probably mid-single digits. That's a material slowdown. Of course, these companies have fantastic margin levers. So I think they will manage those. They can still deliver decent VAT numbers, but I think overall earning estimates are still, I think they will meet or barely meet, or there could be scope for some downside revision for the overall sector as such. And we were mentioning that we do find much attractive opportunities outside the external facing sectors. I mean, if you think about, for example, banking, industrials, even real estate, I think the earning outlook trajectory, we feel far more confident, and that the valuations are also not that expensive.
Okay, we'll leave it at that. Thanks for joining in and have a great day. That is the word coming in on the markets. Well, let's take a quick break. Lots of stocks to talk about. So without wasting any time, head into a break. Come back with the entire research team and give you the list of top 10 stocks for the day. Stay with us. Welcome back. Hope you're having a good morning so far. The SGX Nifty is indicating that the morning will be better for the bulls today, so 15 points higher. We've been gaining quite a bit, and there are plenty of stocks to talk about. So let's get our research team on board. IndusInd Bank actually tops the list this morning, and we'll find out more from Vivek. Vivek, what's going on there?
Well, good morning. Similar to Kotak Mahindra Bank yesterday, what IndusInd has done is they've updated their latest shareholding pattern to the exchanges last evening. And as per the latest shareholding pattern, the available FPI room currently stands at 14.19%. So what IIFL Alternative Strategy says is that on the back of the limited available FI headroom, it appears unlikely that IndusInd Bank could make the cut as far as the MSCI standard inclusion is concerned, at least for the May review. Now, also one important thing that they have mentioned is that the NRI holding, which currently stands at 0.6%, at this point of time, they are still uncertain whether they could classify it as repatriable or non-repatriable. In case it is repatriable, that particular classification comes in as a domestic fund. So what IIFL is saying is that on the back of lack of clarity on account of the 0.6% stake, MSCI at this point of time may not consider IndusInd Bank. However, they have said that they would be keeping an eye out for this particular name in case there is a chance that the stock moves higher and there is a case for a future inclusion into the MSCI indices. Slight red for IndusInd today.
All right, Vivek, thanks very much for that. Mangalam is standing by with Delta Corp and Sula Vineyards. Mangalam, morning.
Well, good morning. I'm looking at Delta Corp because they reported their fourth quarter numbers, and this time around in a seasonally weak quarter, it was a soft performance that the company reported as well. Not entirely unknown by the street because they had said that one of their properties, the key property in Goa, was shut for a large part during the quarter. But then again, it had the benefit of a favorable base as well. Same time last year, there were Omicron-related worries. So net revenue growth of 4% and EBITDA decline of 13%. And on account of an exceptional loss in the base, the net profit looks like it's a jump of 6% year on year. Net of GST, the casino business grew by just about 1%. There was a sharp decline in the EBIT margins out there. The online business continued to post losses on an operational front. However, just important triggers to watch out for Delta Corp are, the license for their casino in Daman. The case is still yet to be, given closure from the High Court, and the IPO of their online business as well. The stock has entered the F&O ban in yesterday's trading session just ahead of numbers. So that's something we'll be watching out for. See a mild bit of red on Delta Corp. For Sula Vineyards, good numbers coming in, good update coming in. Their own brand sales were up 15% in the fourth quarter, and for the year they were up 26%. Remember, the fourth quarter is a seasonally weak quarter for wine consumption. Wine tourism revenues, however, were up 18% year on year in the fourth quarter, and for the year they were up 30%. So see some green there.
Okay, so you're saying that people are not gambling as much, but they're definitely chugging all the wine. But I thought that goes hand in hand, right?
What I'm trying to say actually is that, people wanted to gamble, but this time around the ship was shut, the casino, so they downed their sorrows with some wine.
Okay, that's a better way to put it. Thanks, Mangalam, for that.
Mangalam knows quite a bit, right, for someone who doesn't do either.
Yeah, exactly. Someone who doesn't consume either. There's a lot of knowledge there. Thanks, Mangalam, for joining in. But let's go across to Vivek. Vivek, any exciting stocks like the ones Mangalam was tracking?
Well, it's the new age companies that we are looking at today. A lot of fund action actually in yesterday's trading session. So Delivery is the one we are looking at. Tiger Global continue to pare its stake, 1.6% stake sale they've done out of the total 4.68% that they held at the end of the December quarter. So, almost 330 rupees is where the block deal actually happened at. Sagar Cement, yesterday a very large block deal, but the good part is, the entire block was snapped up in one single trade itself. So PGIM India Mutual Fund sold almost 4.7% stake, and the single buyer was ICICI Prudential Mutual Fund. And lastly, Venus Pipes, not a name we discuss too often, but an interesting HNI has bought into this particular name. So Ashish Kacholia has picked up almost 2% equity via a block deal in yesterday's trading session here.
Okay, all right. Thanks a lot for that, Vivek. Sonal is with us as well to tell us some more stocks that she's tracking. Morning, Sonal.
Good morning, Nigel. Let me start with BHEL and Titagarh Wagons, because the consortium here has won an order which is for 80 Vande Bharat train sets. This they will have to do over a period of time. 80 train sets have to be made by this consortium at a rate of 120 crore rupees per train. So it's a total order of 9,600 crore rupees for the consortium. Time Technoplast, because they've won an order from IGL which is worth 54 crore rupees for supply of CNG cascades. Sanofi is in focus because the diabetes drug of the company, insulin glargine, has become more affordable for the consumers. There's a weighted average cut of 21% on the pricing there. While the company says that there will be an impact on sales, not on profits, but yes, there is some cut that we are seeing here, so the stock could be in the red today. Okay, in fact, you were just talking about Titagarh. In a while from now, Umesh Chaudhary, the MD and CEO of Titagarh Wagons, will be joining in to talk about these Vande Bharat orders and what it means for their business. In any case, the stock has had a decent run in the past on the back of these orders itself. Let's do a quick recap of our other stocks with positive news flow: Sula Vineyards, Sagar Cements, Venus Pipes, BHEL, Titagarh Wagons, and Time Technoplast, while stocks with negative news flow: Sanofi, Indocin, Delta Corp, and Delivery. But let's also get a quick handle on what's happening in the world of commodities. By the way, Bitcoin has come back in a big way. It's back above the 30,000 level for the first time since June of last year. So that's an asset class that's coming back. But the queen of it all, Manisha Gupta, is joining in to give us a roundup of all the action there. Manisha, hi, good morning. What's the buzz?
Absolutely, Sonia. With Bitcoin, that really seems to be making a headline. It's a 10-month high. The open interest at October highs, and we have seen, Bitcoin gain up by 81% in this year until now, and that's not the only one. Ethereum is up 55% as well, and that's pretty much the case across altcoins. So the sudden emergence of banking crisis is what has led to a lot of support coming in for this space as well. But gains also are seen in crude oil prices. That rallied 2% overnight. That one is trading at a 1-month highs. The tight global supplies and prospects of high Chinese demand and expectation of more stimulus measures coming in from China has been supportive for the crude oil prices. We are seeing a similar trend for the metal prices also, where copper and iron ore to some sense have seen some gain come back into the market. But it really is the soft commodities that should be on your radar as well, because the global raw sugar prices now are trading very close to their 11-year highs. The coffee price is trading at 1-month highs. You have cocoa trading at 28-month highs. So everywhere that you see, you have seen money come in for alternate asset classes. So commodities and cryptos clearly shining.
All right, Manisha, thanks very much for that. Cryptos are coming back as, on the banking side, there has been some uncertainty. It started with that SVB thing. The crypto and other crypto assets started taking off, and they're doing well for now. We'll take a very quick break here. Hemang Jani of Motilal Oswal Financial Services will join in for some quick fundamental stock analysis. Later, we'll be speaking with Umesh Chaudhary of Titagarh Wagons to talk about the orders the company's received from the Rail Ministry to manufacture 80 Vande Bharat train sets. Stay tuned.
Welcome back. Hope you're having a good morning. Well, the SGX is suggesting a more or less flattish with a mildly positive start to trade. So let's see how that works. But we've got Hemang Jani who's joining in to help us out with some fundamental stock analysis. Hi, Hemang. Good morning. Thanks so much for joining in. Well, results season is upon us, and we'll be waiting for the big tech names to come out with their numbers. But I'm not sure whether you track Delta Corp. There's always been value out there, but unlocking that value has been difficult, and they've had a soft quarter. What's your view at around this 180, 190 rupees odd? Yesterday, it seemed the street was as still sensing it because the stock went into the numbers weak. But they've got cash in their books, the business is fairly decent, it has some risk as well. How do you approach it at these levels?
Yeah, good morning, Nigel. I think I looked at the numbers. They appear to be on a slightly, a muted side. And in terms of a very niche segment under discretionary consumption, this stock is something that, some people do have an exposure to. But we don't cover it in detail, Nigel. So I would not be able to comment in terms of the view of the reco.
What about Sula Wines? Any view there?
Nigel, can you repeat that?
Sula Wines, they came out with an operational update. Do you have any view out there, or from that segment itself, beverages, alcohol, is there any stock you like?
Yeah, so Sula Wines, we do not cover, Nigel, but I think when it comes to the beverage space, we've been liking Varun Beverage for a while. And, going by the kind of new launches that they have done and the way the entire geographical presence they've expanded, this is one name that we've been liking. Recently, the stock also got added onto MSCI. So we think that this is one name that we would go with when it comes to that, beverage category.
Okay. All right. Which one did you say? Varun Beverages, yes. Right?
Varun Beverages, that's right.
Varun Beverages. Okay, got that. So Hemang, everyone's going to be talking about the IT names, as Nigel was also pointing out. Anything specific that you're watching out for in TCS's numbers today, even if it's a weak showing, if there's some clarity on what the organizational structure would be post the exit of the CEO, if the numbers are not as bad as expected, do you think it's a good time to be maybe parking some money in large caps like TCS?
Absolutely. I think, Sonia, one thing which is very clear is that the market is going into this IT earnings season with very muted expectations. And if you look at the mutual funds or the institutional holding, many of them have an underweight position when it comes to IT. So which is actually a good sign. So if we don't see any major disappointment in terms of the numbers or the guidance, I think the stock should do well. Our own expectation is that the large cap companies will report about 1.6% kind of a quarter-on-quarter US dollar revenue growth. The mid-cap will show a little better. But yes, TCS, we do have a positive bias. We think that the large-cap companies are relatively better placed in the current environment. And within mid-cap, we like Cyient and Zensar. I think these are the two companies where we are expecting good quarter-on-quarter growth with some, decent guidance going into the next year.
I think, Hemang, morning, there were some varying headlines, right, on the state of monsoon. There was a SkyMed saying something, IMD, but the variation is not very much in terms of calling for a normal or below normal. We had and this is important because, we had the management of Mahindra, the head of the tractor business with us earlier, who basically said that we'll know in about 2 weeks' time. What kind of season they're expecting and how they want to plan for the season going ahead. What is your own sense on the issue? Because there are so many sectors where, expectations are getting built in one way or the other with regards to rains. Go on.
So, Prashant, there are 2 or 3 things that I would like to convey here. One is that it's a little bit early to really take a call on the monsoon because, as we move closer to June, I think that is where we will have a slightly more clarity. Number 2, when people say that, okay, it's going to be 96% or 94% of the long-term averages, that by itself does not mean anything because what really matters is, whether, the overall spread is good or no. And thirdly, even if there is an El Nino impact that people are, making out to be, that does not necessarily lead to inflation. In fact, we have come out with a report which says that there is not much of a correlation between an El Nino and inflation. Now, having said that, I think, for us, sentimentally, a normal monsoon definitely is something very big for us. And particularly in the context of the slowdown that we are seeing on the rural side, on the consumption side, I think, any news will have some impact initially. But we do not think we should worry too much about it at this stage.
Okay, I do want your thoughts on this entire railway space, Hemang, because there's a lot of orders that are coming through for companies, right? Especially with the Vande Bharat trains. So let's get, the management of Titagarh Wagons on board. The BHEL Titagarh Wagons Consortium has received an order from the Rail Ministry to manufacture 80 Vande Bharat train sets. The order value is at 9,600 crores, which means about 120 crores per train set. Remember, last month the company was declared L2 for 200 train set orders. So is this the same one? Is it a new order? Umesh Chaudhary, the MD and CEO at Titagarh Wagons, joins in. Umesh, good morning. First, if you can just clarify for us, is this part of the same order for which you had got L2 last month? And that was for 200 trains, right? So this time you've bagged just 80 trains. Can you clarify what's happening here?
Yeah, good morning. Yes, it is the same tender. It was a tender for 200 trains, and tender stipulated that the L2 bidder would get 80 trains and the L1 bidder would have gotten 120 trains. So we were the L2 bidders and we got the 80 trains arising out of that.
So are you expecting any more trains, or is this it, 80 out of the 200 orders total?
No, this is 80 out of the 200. So that tender stands closed in the sense the gap 200 would get distributed between the L1 and the L2. But of course, this is the beginning of a new opportunity. It's almost the beginning of a new era, I would say. Because Vande Bharat type of trains are the future for the railway transportation in India. And the very fact that we've been able to get into this with the 80 train, which is a substantial order, mind you, even if you look at the global scale of ordering for such type of trains, this is perhaps one of the largest orders because this also has a maintenance piece to it. So while the basic supply is 9,600, the total contract value would be about 24,000 crores.
All right. Hi, Mr. Chaudhary. Good morning and congratulations on this. Well, your share with BHEL is around 55%. So does this apply to both the manufacturing as well as maintenance?
Yes, it is. Our share is about 52% to be precise. We're about 52%, and this is on an overall basis. So yes, it is on the supply and the maintenance part.
All right. Just another counter question for these to execute these orders. Do you have capacity, adequate capacity, or do you have to put on fresh capacity, incur some capex as well? Give us some clarity out there.
So, we would be producing these trains primarily in our plant in Uttarbara, where we have been producing the Pune Metro train, and we'll be producing the Bangalore Metro with CRRC, etc. So we have capacity to produce this kind of trains, but, considering the magnitude of this order, which will kind of see us through for the next 5-6 years, so it will block one line of capacity. We are looking at expanding capacity, and so that, we don't kind of let go of the metro market, which we worked hard on developing. So one part of our capacity would be blocked for this Vande Bharat, but we would be expanding and incurring capex to expand capacity in order to continue to be an important player in the metro segment as well. The contract also, the tender also stipulates that the final assembly and the testing of the train would be done at the railway workshop in Chennai. So in ICF, the railways will give us a particular plant or a part of a plant where these trains would be then transported and assembled, and BHEL's propulsion that is in their scope would be fitted into the train. So that's the entire package.
Umesh, hi, morning. Just a few more questions. You mentioned this 23 to 24,000 crore value. What was that? Could you clarify?
Sure.
That was the total.
The supply portion is about 120 crore per train. And the maintenance that we will get is about 1.5 times, 1.4 to 1.5 times of the supply price. So each year we would get a maintenance. So this is with a 35-year full maintenance contract. And globally, maintenance is a very good business to be in. I mean, we've seen whether it's in this or any other capital goods sector. So it's a very interesting development because it kind of opens up a new avenue for the railway rolling stock industry, wherein rather than just being a manufacturer, we are also getting into the services part of it.
So you're saying that for the 80 trains, over the value over 35 years, the total receivables could be 23,000 to 24,000 crores, if I got that correct.
Yeah, it's about 4,000 crores, that's right.
Okay, got it. Now, could you, and as you said, this is a new opportunity. Could you give us some context in terms of, what is the number of Vande Bharat sort of trains which have been rolled out in terms of tenders, ordering, etc.? How much more visibility do you have at this point? I mean, even around the time of the budget, there was lots of expectation that we'll see a big announcement, 1,000 new Vande Bharat trains, etc. Could you provide us with some clarity there?
Sure. So the government has been very vocal about this, that they would like to move over to the Vande Bharat type of trains. The total, Vande Bharat started being produced in one of the railway units, which was ICF. Now they're producing it in the other railway units, but then they decided that they would also buy these trains from the trade, from people like us or the other rolling stock manufacturers like Alstom, etc., etc. So they floated 3 tenders. There was a first tender of 200. That is the one that we have one part out of. There's another 2 tenders that have been floated. One is been submitted and not opened as yet. One is yet to be, the price bid is yet to be submitted. That makes it. But we understand
that makes it. Umesh, sorry, we missed that number.
That makes 400. It 400 trains. 400 trains.
Okay.
But apart from that, the railway by themselves is producing maybe a couple of hundred or even a little more than that. So all told, we do understand that at least 1,000 trains of Vande Bharat would really come out on track over the next maybe 5-7 years. So the period can be a couple of years here or years there. But the intent of the railway is to, or the intent of the government is to completely transform the way railway journey is defined in India.
Got it. So, this 1,000 trains, just to try and put some numbers to it, I'm sure you're expecting a lot more revenue visibility, right, as you bid for these tenders that will come through over the next 5 to 7 years. If you look at your own revenue trajectory over the last many years, you are now sitting on a base of around 2,000 crores per annum. What do you think you can take it up to, given that you have not just this Vande Bharat orders, but also you're looking at exports, maintenance in a big way as well? What do you think you can take this trajectory to, annual revenues?
So, Sonia, if you look at the December revenue, we did about 750 crores. So that kind of takes us to a 3,000 crore annualized revenue situation. Now, from where we have come 5 years ago, we were in an annualized revenue of 300 crores. So we have, of course, the journey which is quite meaningful. Going forward, we have to, and this is also important to state that in terms of our strategy, from being a wagon manufacturer, we have now emerged, or we are trying to emerge ourselves as a railway system provider. So we've kind of also proposed a change of our branding and our name from Titagarh Wagon to Titagarh Limited. And the 2 businesses that we are focusing on is on the freight rolling stock and on the passenger rolling stock. And both of them, if you really look at the current revenue that we are getting, the December quarter revenue, if I kind of take that as a benchmark, that was 85% from the freight rolling stock. So, while that continues, the passenger rolling stock is a business that is kind of just as a startup, it's just starting now. So we believe that there is a good kind of attraction. There's a good tailwind in terms of the entire railway infrastructure spend, in terms of the entire space that we are in, and we have been able to upgrade ourselves to be an important player in this space.
Got it. Very quickly, Mr. Chaudhary, final question. I'm reading a Nuvuma report. They believe that you'll do close to around 3,700 crores in FY25 with margins close to around 9%. Going by your order book and all that you said, is that doable?
So I would not like to comment on any, we don't give any guidance as a policy. So I would not like to comment on that. But all I can say is that, we have a very healthy order book. We didn't speak about the railway
revenue growth, sir. Mr. Chaudhary, double-digit revenue growth possible from here on? That's doable, right?
I think that's something which is definitely possible in terms of revenue growth, because considering the order book and the ramp up that we have been able to do.
And margins in high single digits, 9%, or you're doing already around 8%? 9% is doable.
We have always given a guidance of a margin level, of a sustained margin level of 8 to 10%, and we continue to do that. I would like to probably highlight upon the wheel tender, which is something which we didn't speak about, which also we got the letter of a couple of a week ago, along with RK4G, which is a very important part of our entire strategy. You see, whether it's freight rolling stock or it is passenger rolling stock, Indian rolling stock business has always been impacted by lack of availability of wheel sets.
Interesting.
And like Ramakrishna Forging, which is a pioneer in their field.
Yes.
We that it's a very kind of a very synergistic advantage for both our companies.
Absolutely, absolutely.
So if you
Umesh,
can
just
give us-
one more question, sorry. Just going back to, if you can respond briefly to this. So, trains were anyway being rolled out, right? So so this is a new, train sets are different, as compared to the earlier trains which were being made. So are we talking about the number of trains being rolled out being much more than before? Because is it the question of one replacing the other? I mean, the new replacing the old? Or is it that the order value per train is much larger? Or is it that the private participation in these new trains is much larger? Which one is it? Briefly.
It's really a combination of all, but it is primarily a shift in the entire rolling stock experience of the commuter. So, basically what is Vande Bharat? It's an EMU.
No, I got that. Umesh, but I'm saying, the response has been fabulous and very, very well received. But from a business point of view, from a manufacturer point of view, I'm just trying to understand which of the three is it?
So from a manufacturer perspective, it is the modern trains coming to private sector. Earlier, the trains were being produced by the railways of the old design. Here, the railways are saying that come and supply us modern, state-of-the-art, international quality trains, where the private sector has a role to play.
Okay. In fact, I do want to also ask you about that whole the JV with RK Forgings and what you've bagged, but we've completely run out of time, so we'll take this opportunity and take this discussion to another day. Let's slip into a quick break on that note. On the other side of the break, we will have Mitesh Thakkar and Sudarshan Sukhani join in for some technical trades. Stay tuned. Okay, so we are bracing ourselves for what looks like it's going to be a good day today, but let's get our technical guests on board. Before that, Hemang Jani is still with us. So, before we bid goodbye to him, Hemang, I don't know if you heard that conversation we had with Titagarh, but this has been a fabulous stock, right? I mean, it's more than doubled in the last 12 months. Do you see more upsides based on the visibility with these Vande Bharat orders?
So, Sonia, the stock has done very well, but one point which I would like to make is that apart from the order inflow because of Vande Bharat and the way the government is spending, what we must understand is that how much time it takes for the order to get executed into the revenue and profitability. And given that the stock has already run up so much, I just saw that it is quoting at some 48 times, trailing P. So, and that is true for some of the other defense stocks also. So my feel is that rather than reacting to the order inflow, what we should bear in mind is the valuation and the actual growth visibility, because you will have some patchy quarters. So look for entry into some of these names, at a correction rather than chasing when the order flow is very strong. And we don't cover this stock, but within defense we like Bharat Electronics and HAL, and we think that from a medium to long term perspective, they are very good bets given the kind of positioning that the government has taken.
All right, Hemang, thanks a lot putting some caution out there in terms of valuations. But Hemang, just to add on to that point, a Nuvuma report, which are very, very bullish on them, they're estimating that the EPS goes from around 7 rupees to around 15.5 rupees in the next few years. So let's see whether or not that happens, but we're taking your caution on board. Thanks a lot, Hemang, for stopping by and discussing all those stocks with us. We look forward to having a chat with you in the coming days as well. Well, a good time to get in our technical experts then. We have Sudarshan Sukhani as well as Mitesh who join us. Good morning, gentlemen. Sudarshan, you go first. What's the call on the index?
Hi, good morning. This is one of those easier days. For the last 10 days, the call has been so consistent. This is an uptrend. Now, there is nothing to suggest that the uptrend is going to stall. I don't think so. It will consolidate, it will pause. That's a normal process. But we are in a strong uptrend. We should be looking only for buying opportunities. Today, we could see a choppy market. And that is not so much because of the Indian markets. That will be because of the US markets. They were flat yesterday. Or everyone in the US market is waiting for the CPI numbers. So I don't know why, but India is also going to do the same, waiting for their numbers. Today will be choppy. If you see sharp corrections, go and buy those sharp corrections for tomorrow.
Okay. Oh, yeah. Even we have no answers to those questions, right? Why do we track those numbers very closely? But be that as it may, what about individual stocks? Sudarshan, good morning. What are you looking at?
Well, it's just a coincidence. I suddenly realized I have only PSUs for buying today. That was a coincidence because the charts were pretty good. Bank of Baroda has come out of a very long consolidation. It broke out yesterday. It then had a dip, intraday dip, but that's all right. So Bank of Baroda is a buying opportunity with a stop under 165. NMDC is a buy. It was in a bear market. Now that bear market doesn't come to an end quickly. It takes its own time. It's giving the first signs of life. It's worth taking a trade. Again, it's a positional buy. You know, once we enter a strong uptrend, Sonia, positional buys give you much more rewards because they give you gaps also in your favor. So NMDC is a buy with a stop under 105. Havells is an intraday short. It's a very choppy chart. Remember, shorting is done only intraday, stop above 1183. And BHL is a hope buy. The charts are not as good as my hope is. So stop under 67. Keep this as a quick trade.
Got it. All right. Thanks for that, Sudarshan. Mitesh, what about you? Give us your call on the Nifty, Nifty Bank, as well as a couple of stocks.
Good morning, Nigel. Yesterday, I talked about taking part profits off purely because of two reasons. One, we are close to the levels of 17,780, 800 zone, which is a supply pivot. And also is the fact that we have about 900 plus points kind of rally in the last 7-8 days, and we are slightly overbought on the hourly chart. So I think as you had a good rally, as you hit a supply level, I think there is a good chance that we might see a couple of days of consolidation. I think that approach kind of still continues. If people haven't booked it, I think at least take half your profits off. On the downside, 17,600 is a very strong support area. So buying near that is what I would look for in the next 1-2 days in case we get some volatility. And on the stock side also, for the last many days, we have been having all buy calls. Today, I have 1 sell and 3 buys. So we're trying to explore some shorting positions now that, my belief is that there could be a couple of days of pullback or consolidation, but the overall trend remains on the upside. So the more bias or the eventual bias is clearly on the long side.
Okay, let's do one thing. Let's take a quick break on that note. Thanks a lot for giving us all of those ideas. When we come back, we'll have Vikas Singh of Phillip Capital to put focus on the steel sector. Do stay tuned in.